Going to the moon. Going to the moon. We're going to the moon. Screw Kenny, cause we're holding on for dear life, getting them tendies so soon. Don't be mistaken, the apes won't be shaking or breaking because we're going to the moon. Day very soon, gonna wake up on the moon. Brand new yacht and a McDonald's in my living room. Bright yellow Lamborghini, 50-meter swimming pool. Champagne every day, hey fam, what you do? Wanna hang, wanna chill? Oh, you got a mansion too? Oh, that's right, held on tight, jack titties every night. We was in way back when they tried to drop it down to 10, and she couldn't comprehend. Ace was strong until the end. Now let's retell it. Citadel, they be sweating. Had enough of these felons, but the Ace we rebelling, cause we never be selling till we send it to heaven. Now we be out here yelling, hey, screw you, Kenny! Bought my wife a minivan to share with the boyfriend, but I pull up in the Benz, plate saying olive crayons, going on an airplane. Don't think we'll be back again, celebrating every day like it's your birthday. Screw Kenny, cause we're holding on for dear life, getting them tendies so soon. Don't be mistaken, the apes won't be shaking or breaking because we're going to the moon. Screw Kenny, cause we're holding on for dear life, getting them tendies so soon. Don't be mistaken, the apes won't be shaking or breaking because we're going to the moon. Today's expectation, probably more manipulation. FUD, a creation of a crooked operation. Bought more while it was low, got more dips than Trader Joe's. Oh, you thought that we'd let go? What the hell you take us for? Holla if you spend your last dollar on bananas while living in squalor. We don't claim to be scholars, we the smooth brain dummies, and we never stood taller. Yeah, we do this for love and we do this for honor. Apollo 11 ain't got nothing on us. We the planet of the apes and MOS we trust. MOASS, oh hell yes. Gonna send it into space, go fire up the jets. Done my DD, call me Elton John, Rocket Man. This is the way, gonna be gorillionaires. Ground control to Major Tom, we about to have liftoff. Call us Neil Armstrong, gonna keep holding on. Screw Kenny, cause we're holding on for dear life, getting them tendies so soon. Don't be mistaken, the apes won't be shaking or breaking because we're going to the moon. Screw Kenny, cause we're holding on for dear life, getting them tendies so soon. Don't be mistaken, the apes won't be shaking or breaking because we're going to the moon.
That's right. We're going to the moon. Yeah, we can hear you fine. I'm about to do my introduction for the man, the myth, the legend, running with bears, not from bears. Even though that says it on his name, it's okay, guys. Hey, listen up, guys. Good morning. This is a special stream. It's a Saturday stream. If you guys see him in the little thumbnail there, that's Running from Bears when he actually has a hat off. But right now he's wearing Alabama because he's mourning the loss that was last night against San Diego State, killing it on the basketball court. But I'm going to get him on the stream right now, guys. You guys will see him live and we'll hear from him. What we're going to do, just to give you guys a breakdown of what the stream is, we're going to break down GameStop's earnings report. We know that the 10K is not out. Of course they would play another song while I'm talking because I don't have an engineer. I don't pay for it. Apologize. But I'm just telling you guys right now, we're going to break down what they did release, the actual press release, the financials that we do have, and we'll get a good idea of what we're looking at, guys. So without further ado, my man, your man, Running from Bears or with Bears. What the hell is it?
Something. There's something, man. I'm not sure which one it is.
I hear you, Bears. I turned you up so they can hear you. There you go. You're good. And I just want to make sure everything's clear.
Good.
Yeah, we're good, man. I'm going to go and open up my phone really quick just so I can get a good look at it. Guys, this is Running with Bears. He is a certified public accountant, knows a lot about balance sheets, helps me out throughout my day. If you ever have a question, you guys can find him in the Discord. He's there. By the way, the Discord is pinned to the top of the chat one time whenever one of these mods wants to pin it. I don't know when they want to do it, but I have 20 screens open right now. I wish they knew. Digging deep, by the way, Connecting the Dots Part 10 coming out to you soon. But without that, let's go ahead and talk about you, Bears. How you been, brother?
Doing pretty good, man. Just doing some consulting, doing some running, reading, trying to help people out where I can with this stuff. It's been a good month so far.
So just for everyone out there, when he says he's doing some running, you're actually running with bears. Is that correct?
Yeah, it's a literal name. It's not. It has nothing to do with stock stuff. It's like from the South. Since every time I've run a lot, and people would be like, "Oh, why are you running so much?" And I always do like a dad joke, like, "Oh, I'm running from bears or running with bears." So it's not.
That's
the
cool.
funniest thing
You
ever.
got the physique of a runner, man. I tell you, I'm envious because when I
No,
was I'm gonna tell you.
I can't lift. I can't lift weights.
No. Check this out. So like, I learned this when I was in the Army. They go, hey, whenever you think about like special forces or you think about guys that are like tip top shape and they're amazing, don't think about Rambo. Like, think about Forrest Gump. Think about somebody who's just can run, and you already wear the Alabama hat. So you got Gump written all over you, brother.
Yeah, Gump, man. I got to lean into it, man. If you're gonna be from the South and run, you just got to own it, right?
Yeah, it's all good, bro. It's all good. So welcome to Mobile, Alabama. We're here to look at GameStop's earning report. Here's a consolidated sheet. I'm super excited about what they did for this quarter. I actually called the price per stock. We get that, the $27 peak that it was. But that was a hell of a run to go from 16.15 the week before all the way to 27.54. And people are saying, well, they just filled the gap or they just hit the Dorito line, the hedgy nightmare line from my boy Badass Trader. But when I look at it, I think that over time, over this next year that they announced they're going to become profitable every quarter, I feel that they're going to set themselves up to be introduced into the S&P 500. I have that on my mindset for the next year and a half. That's where I'm headed with it. But we got to make sure that these guys can make money every damn quarter. And I think they sandbagged the number, like I told you. And I think that they are doing the same thing for quarter one, because as you look at SG&A for next year, I'm already pumped. I'm already pumped for quarter one and quarter two because all the one-timers that were in their favor. But I'm sure you're going to break down everything we do. Guys, by the way, this conversation is not scripted, not even thought about. Bear's going to give me his thoughts. I'll give him mine. And that's how it works. So without further ado, how do you feel?
Yeah. Honestly, I'm just super shocked at these numbers. Like I am, like, full disclosure, I'm long on this thing, like really long. And I would have been surprised if they cracked 2 billion in sales, just the way the retail sector has been, right? Like it's taking a beating. So the fact that they came in flat to last year on revenue, I think that's actually pretty impressive, really impressive actually. But for me, the big thing is like the $200 million swing in net income, right, on flat sales. Like, this is a $6 billion company, right? So if you're going to make changes, that's really hard at that scale. So to swing net income that hard on flat revenue is honestly kind of impressive, right? So and the next big thing for me would be the gross margin swing, right? They went from 16.8 to 22.5. And like just in retail, just getting like a 1% to 2% pickup would be a big deal, right? They got close to 6. So
yeah, 5.5.
Yeah, 5.5. And that's a 5.5% increase on a 16.8% base, right? So that's actually like a 30% pickup when you look at it from a base year perspective, right? And then we knew in Q3. So last year, when I went back and looked at the Q4 or 10K last year, and they talked about margins being low because of console sales. And then this year, they're trying to come up console sales to increase gross profit, right? So it's clear they did that to a huge degree because it's a flat revenue, but gross margin is up by, like I said, 6%, right? So it really shows a strategic shift and getting, better margins in the door, right?
Hey, before we even start that, did you watch the Meet Kevin nightmare that was of him breaking down a balance sheet?
I did. I kind of skimmed because I think Suit sent it to me, right? And I did kind of skim it. I struggled with it because it's clear he knows the concepts. I just didn't agree with the outcome, and I can talk about some of that too, right? Some of the headlines that I'm sure are going to come out trying to spin these results in a negative ways, because we could talk about how to kind of like what the conclusion they're coming to and like how to like kind of like look at the math and check yourself, right? But I didn't agree with the conclusions he's coming to, right? Like he had the right starting point when he takes like a hard left and goes somewhere else.
Yeah, no, I'm with you on that. I saw it. It was like he was reluctant to give credit where it was due. And at the same token, like I tell everyone whenever they say, hey, can you look at this balance sheet? I said, no, I can't, because I need to know the business. I need to know the time frame and what is the idea behind it. Like once you understand what the business is trying to do, if it's cyclical and if the leadership's headed in one direction, people have to take that into consideration. Certainly when they're thinking about paying off bills, deferring things to a different period. I know that a lot of people like to stay in a box. A lot of people like to compare year over year, which is fine because you're supposed to. But what they also try to do is compare period to period, which you can't do because they do run concurrent, like one after another. But what happens is certain things are happening in one quarter versus the next, and this is in every business. There's businesses that set up their budgets fiscally for employment, for cap expense, for numerous things. And when you look at GameStop, they're doing the same thing. They're just running a really good business from my standpoint, from what I see. And I don't want to fluff it too much, but I'm telling you, $48 million is a really good number considering, all things being equal for the last two quarters. To come out on the net side of that, people have to know exactly what they're looking at. So I was very excited about that.
Yeah. Yeah, I was too. And I thought it was a little, I had some concerns because retail especially is so seasonality driven, right? You just don't take your revenue divide by 12, right? So inventory should flex throughout the year, but I can address this points when we go to the balance sheet, but there was some, I got some counters to all that.
Well, we're going to go over it. So the first line that we're going to do, we're going to go line by line, guys. We're not going anywhere. So first line is net sales. As you know, people like to look, like I had this guy, Sean Williams, on Twitter. He wrote to me, he goes, "Come on, Rantz, you can't tell me sales aren't down the last 9 quarters." And I'm just like, are you an idiot? You're talking about top line revenue versus a shrinkage in stores themselves, to go from 7,500 stores to 4,500 stores. And now they apparently, me, Kevin, has data I don't. He already had said the new number, and it's even lower than what it was before. And I want to know how he knew that because I don't have that number. But hey, I'm not saying he's a liar. But just so you guys know, GameStop sold $30 million less, $28 million less, and they are shortening their footprint. So to have that type of top line revenue in this downturn, this economic downturn that you're stuck in, this window of people not spending money or people afraid to spend money, that's just consumer price index confidence that you guys see every month that they announce. But I think GameStop killed it, me personally. And this cost of sales line where they're trying to tell us that GameStop has now a profit margin that they didn't have before. Do you have any ideas on why that would be?
Yeah, it's a good question. We can talk about that. So, when you're a cyclical business and you're loading up for the holiday season, right? You're going to want to kind of expand your inventory to put stuff on the shelf that you can just turn around and liquidate for the holiday season, right? So, you expect inventory to go up, and then so you can make the additional sales, and then that inventory turns into COGS. Because for folks who aren't as familiar with GAAP, cost of sales is literally just the cost of inventory, nothing else, right? Because that gross profit is a key metric because it lets you know kind of what's left over to run the back office, right? SG&A, because your core business has to generate so much gross profit to fund the back office, right? And that's a key. Right. So people really hone in on this gross margin because even a slight change to gross margin, that stuff's tracked so heavily, and we want to know why, right? Because its revenue is price times quantity minus discount. And when GameStop internal, you have the 3 main parts, right? You got hardware sales, you got software, or the games themselves, and you got collectibles, right? So internally, what you're going to do is across all the stores and online stuff, you're going to try to forecast out how many consoles, how much software, and how much collectibles, and you're going to try to variance to all that, right? So, the fact that they could close the stores that they had and still generate flat revenue is encouraging. And because the gross profit increased so much that we know in Q4 of last year, they said gross profit was tight because they didn't sell as much other stuff, right? So to go from 17% to 22.5% is you would have had to come off console sales and generate more software and collectibles. And I was even kind of skeptical about the collectible thing because we've all seen the Funko news, right? Where they put them they threw them away, right? So that's going to be a dud. So I would bet the software, the actual game sales came in hotter than anyone was expecting. But to see the cost of sales, the gross margin actually increase, that's management, tweaking.
Yeah, there's some big titles out there, but I also want to tell you, whenever you're thinking margins in general, I think in and I factor in inflation. that year before, if you're looking at 2022, they weren't factoring in being better buyers because there's this inflationary period that we are now stuck in that they didn't know existed, but they came in and they bought everything at top dollar, and they're probably paying for it and even to freight it around. But as you mainstream your freight and you learn how to do this the right way, you become better buyers, as I call it. I think that they have figured out how to become better buyers, and over time you leverage that with demand, right? So your demand you can leverage pricing with, and if there's a demand for it, i.e., any game that was sold out or people at the door knocking for Pokemon cards, whatever it may be, that exactly can leverage a cost swing your way. You just got to leverage it and strong arm it. I know only because, when you look at retail, there's certain products that people can put on the shelf and nobody can compete with that price. And you ask yourself, how are they willing to take a loss? They're not taking a loss. It's just they've strong armed the distributor of those products. So maybe they are doing the right thing and leveraging it that way. Say, hey, we're GameStop and look at us. We're selling this. We can sell these PlayStations and we can sell these games. Just give them to us. So I know all the games that were sold out. God of War sold out during that period. Call of Duty was selling during that period. Pokemon, both of them. I forget whatever they were, but the Pokemon thing was selling like crazy as well. That's all during this time frame. Which last year I didn't remember the big titles at all, but now I'm sitting here looking at Hogwarts coming up for February, and I think these games can push the envelope just enough. I mean, if we're losing in software, that's one thing. Like you're losing, but that's that's the Fortnite effect. That's the everything effect right now, digital effect. But we're still pushing the envelope where we need to, and to swing into board games, collectibles, that's great. It's a good category that we didn't have 5 years ago.
Yeah.
So it was there, but it just wasn't as it was 300 million. Now it's almost $1 billion, $964 million. So that's cool. And gross profit is everything. Yeah.
Yeah, it really is, because the whole business hinges on gross profit. That's why, from a metric standpoint, gross profits track so tightly, right? More specifically, gross margin. But there's just so much to that, right? Because if you're going to see cracks in the foundation, they're probably going to start with revenue and gross margin, right? But that was a good comment.
Yeah. So then the next thing is going to be SG&A, which I'm a firm believer that they're just better. They're better operators, right? They're cutting out the fat, and it shows. To have a swing of $80 million, I think that's a huge number.
Big swing.
And when you look at SG&A for this quarter, which is your most expensive quarter, right? Like when you really think about it, like it's quarter four, we've always naturally spent more money during quarter four. Have you seen the SG&A for quarter one? Have you seen it?
For this drop, right? It's in the mid 300s typically, right? On Q1, right? So,
well, we were at 450 last year, 440, 438, something like that. So you mean
I think it under 500?
Well, I think they're going to come in. I think they're going to come in at around 330 on quarter one this year. So I said it's going to be $100 million swing. Yeah, I think they really know what they're doing. And if you want to compare it to somebody like Bed Bath & Beyond, where they're making cuts now, they won't realize the cuts until another quarter or two. And GameStop's closing fulfillment centers, they're closing the call center, and they went ahead and shortened up on their footprint. I think they really figured out where they were spending money, and they're going for this four quarter profitability chart. They're going for it, and I think they can hit the line. Asset impairments, I noticed they really didn't have any. Any idea why that would be?
I did look at the footnotes for this. I think this is related to the NFT stuff, because it looked like the income from the NFT and the footnotes for Q3, they're not reporting it as a separate line item just yet. So they actually were just netting it against SG&A, right? Okay. So, which is a little odd, because so typically, I think, in my mind, if the auditors are going to allow us to net stuff, or allow GameStop to net stuff against SG&A, that to me sounds like it wasn't. I would net it against SG&A as if stuff's still in development, it's not quite rolled out yet, and I could convince the auditors hey, this is just a reduction of costs and not really income, right? Because then what would happen, I would think, and always double check me, once the marketplace is truly a thing, we would see it. We should see another income as it's a non-core business, right? And then once it becomes a core business to GameStop and like they're going to dedicate real resources to it and treat it on the same level as consoles, hardware, and collectibles, then you would see it roll into the net sales number. But to me, because it's being netted in SG&A, it doesn't sound like from an internal perspective, they're still kind of working stuff out, which we all know because the whole NFT thing's kind of gone a little sideways. But so the impairment for this is actually related to the NFT because you had to take an impairment hit on that. So it's pretty minimal, right? Like 0.2. So.
Yeah. Well, check this out.
Question.
Beyond that, I wanted to look at some. Hold on, I'm just trying to get my screen right because I got distracted by the chat for a minute. I'm here. So when I look at this, there's a line here that's never here, like on all these earnings reports, and I'm waiting for it. Okay, and I think it's like the ultimate. Hey, suckers, check this out, and it's the online sales. They never tell you e-commerce sales, a percentage of what their sales is. And I think that's like the hidden monster, because if they know the stat, then they know how many stores they can close and they know how to sneak up on the competition with that. They have not told anyone what's the percentage of online sales, what's the penetration, I should say. What's the penetration of their e-commerce versus their actual net sales? I think that's the home run hit. Once you find out that you don't need but 1,000 stores or but 1,500 stores or 2,000 stores because you're actually netting a profit on the backside, that is huge for that SG&A. SG&A will come crumbling down. You can run your business off of just fulfillment centers and online, and it's gonna be crazy. I mean, there will be obviously some type of footprint retail, but I don't think people really know that part yet because I look for it every earnings report. Like, are they going to have some e-commerce numbers on here? And they don't. And because I look at other ones, I looked at Costco 2 weeks ago. They had lost 10% in e-commerce sales. And I said, well, if they're losing 10%, who the hell's winning? Because remember, if someone's losing, someone's winning. That's my whole thing. So, all right. So the next line that we're going to go down to is going to be, I don't have to look at the income. We know what the net income was. We know it was a swing of almost $200 million. Just go ahead and cheer for me on that one. You can with that one running for. I mean, could you even imagine that? You saw my reaction live. Did you see my reaction live?
No, I was working that day. I had meetings all day, and I was like, out of all days to be in meetings.
No. I clipped it. I'm going to send you the clip. I'm going to text it to you. All right. You watch that damn clip because I went to take off my space helmet, right? Because I got my space helmet, the one I wear, and I took it off and I put on, and I came back, and I was like, what just happened? And then everybody starts telling me, and I'm screaming, I'm crying, I'm going crazy, and I think you need to watch it because it makes you know that we're all here for the right reasons. But how'd you feel about that $200 million swing, basically?
At first I had to eat a lot of crow with Suit because I told him I do love Suit because he teaches me ways to be angry that I've never imagined. So
okay, yeah, Suit. Hey guys, shout out to Suit.
I love that guy.
He runs the Discord,
crow with him.
No, he doesn't.
Because I did like there's no way they're turning a profit, even cash flow positive be a stretch. So I had to eat that crow, and I just couldn't. I couldn't believe it. And then what's hysterical to me is actually having interest income on this P&L, right? Because like all these other companies that we look at are just buried in interest expense. This company is actually generating interest income, so it's only $6 million, but it's like that's kind of a fun thing, right?
It doesn't matter, yeah.
Still counts.
So this interest income, why is it in the negative?
Because it's the way it represents income, right? Because the way these statements read, like cost of sales is a positive number, even though it's an expense, right? So interest expense would be a positive number on here, so that if it's income, you flip it to negative, right? So
I get what you're saying.
I do love I love I couldn't stop laughing at this interest income thing. But no, this is really strong. I don't think anybody, in the face of Target, Walmart, everyone else providing weaker guidance to turn around and bump up net income 200 million on the same revenue. That shows direction by management, right? Because like those gross margin bumps, like I said, even getting 1% to 2% would be a big deal. And cutting SG&A is actually really difficult too, because it's going to be like legal, IT, sales and marketing, HR, and it's not clear a lot of times like what an SG&A to cut, right? Because it doesn't flex with revenue, and you need enough support back there to support revenue. So if you cut too much, it could cost you more. And it's just,
so think about this.
It's just so wild.
The back of the house has different ways of cutting, right? So if you want to keep the front running, you got to cut for every loan, for every increase as far as raises, right? We're giving out raises.
Yeah.
And the way we offset that is, hey, no more overtime. So you start penny pinching on that side, and we're not going to pay you holidays anymore. We're actually going to pay you to stay home. We're not going to be open holidays. So they probably figured out that we could just pay you a holiday, a paid vacation, rather than actually paying you time and a half to be in the building. And what are the profits on those said days? And I also always want to know, what is my company doing when it's closed online? Are you getting just as much foot traffic, if not more, when the stores are closed on closed days? I always do holidays. I manage the amount of water that is in the building, right? Like, so when the building's closed, I want to know how many gallons of water we're using, and that's how we pinch pennies. And we actually give out awards in my company for whoever uses the least amount of water on a day off, like when the building's closed. So every holiday, you're looking to see, you're like, well, how many gallons did we use? Oh, we used 104. What the hell is 104 on? Like, but then you find out there'll be some other store be like, hey, this company spent 1,500 gallons. And you're like, what the hell happened? They had a leak. Like, you don't know these things until you're closed. But maybe GameStop doesn't know what they're doing until they are closed, and they can value it. I guarantee you, GameStop is comparing the last 3 years of being closed on certain days and what the online is doing, right? So, like, what does the website do on Thanksgiving when they're closed the last 2 years? Like, that really matters. The increase there, because that's that layered traffic. But yeah, a swing of a crazy amount like this. I mean, man, I was screaming because I need to be.
It's just that's a great point, because that's why I kind of like doing corporate stuff at this scale, because just small things are worth millions to the bottom line, right? So you're constantly trying to figure out what leverage you can pull and change to eke out a little more profitability, right? So then to reduce it by 80 million year over year is just, I love it.
But that's like a quarter. Like, this is literally one quarter. And people have to look at it like, what's coming next quarter? I feel the net income is going to be double than 48 next quarter.
Yeah.
And I sound crazy, I know. But think about it like this.
Didn't say it.
It doesn't have to be double 48.2. That's not what I mean, guys. Check this out. How much did they lose last quarter? Quarter one. Do you have that number on you? I know you do somewhere.
Yeah, Q1 last year they lost. They had negative operating income of a loss of 167.
Thank you. How the hell do you think they're going to lose 167 million next quarter? They can't. Like, they could fall down forward, and they're not going to be able to. It's not going to happen. So,
just dropping the SGA would buy you so much, right?
Yep.
So
I say 100 million. I say 100 million. Maybe I'm crazy. I'm just like shooting for the stars now. And now I'm real cocky. I'm walking around cocky as hell, guys. You should see me. I'm like,
it's been a rough year. It's good to get one.
Do you know how it is though for me? Like, I literally walk around town talking about GameStop. Literally walk around town. And I tell everybody, and everybody's like, oh, they're not. That's not a profitable company. They're going out of business. I'm like, did you see the earnings report? Now I can say that. Now I can be like, did you see the earnings report? I couldn't say it before. Before I'd have to be like, you don't know how to read an earnings report. That's why you don't know what's about to happen. That'd be the difference.
Oh, man, I love it.
All the guys tell me I know what I'm talking about. How close are they to putting out a dividend? What in your mind?
I'd like to see them maybe a couple more quarters of profitability. Because if we're all just in this for the long run, then I'd rather just them keep it internal and do something with it. But I'm conservative.
Well, I don't need the dividend, right? I'm just saying.
Yeah, I'd rather them keep it and do something. No, I know. I think a lot of the holders that are in this now are in it for the long run. We'd rather see them just reinvest it as opposed to pay it out. But it's,
Well, I think when you're stacking 1.4, oh, I'm sorry. They only have $400 million of cash because they have debt.
Yeah, look at the balance sheet. I'll talk about that.
Yeah, we're almost there.
I love a balance sheet. Yeah.
Don't you like it? Hey, what does it cost to live in your house? I don't know. Do I use my savings to pay it, or do I just use my operating cash? I don't know what these guys are doing. All right, so we're good here. The percentages looking in our favor. If you guys look, the cost of sales was lowered down to 77.6 from the 83.2. That's massive. You want that cost of sales to come all the way down every time. The lower, the better. Gross profit will then go up in the opposite direction because that's how the equation works. SG&A to come down 4%, almost 3.5%. That's massive as
Wild.
well. To still have the same top line revenue number. I know a lot of you guys are like, well, they didn't make the top. It wasn't the same. It was $38 million difference. I'm sorry. That's the same, because 38 million on the scale of 2.2 billion is just that. So it's not, you're not missing much on top line revenue. As you guys can see, the operating earnings and asset impairments was flat over there, but overall they had a swing in the positive 2.1%. Guys, I couldn't be more happy. 2.2% after taxes. There's nothing here that says weak to me. You can tell me if I'm wrong here, Bears, but from 6.5 negative to 2.2 positive, I'm not really good at math, but I'm guessing it's around 800 basis points. Like, you ever heard anything like that?
Not for a retail company in a struggling economy, right? I mean, that's just, it's solid, right? Like Jesus.
Yeah.
It's good.
Dude, that's 850 basis points.
We just had more words.
800.
Yeah,
I know. Well,
it's
actually 6.5.2.2. It's about 8.7. 8.7 flip. That is crazy. I think anyone in the world would be trying to get that. So here we go. This is going to be net. Now, I want people to know this. Net sales for the year, to come in for the year for GameStop, literally flat. And a little down, yes, but as you know, they shrunk the footprint, and you're still in this terrible economy that we're living in. Like, macroeconomics does exist, but as you can see, they didn't start making the changes until Q3 and Q4. That's why Q1 and Q2 this year are going to be monster. Like, I think it's going to generate enough momentum to the stock and to New York to say, hey, GameStop's for real. On a small scale, they are profitable. Now, if you maximize that and you ramp it up, you can actually, it'll turn into a hockey stick. The stock will, because you're literally going to see that if you were to put money into this company with the current business model, it could get better. It could get bigger and produce these margins. So that's my plan. That's what I see just by looking at what I see. So tell me what you see here.
Yeah, for me, like, the big story is going to be the flat revenue, right? Like, and I'm okay with it considering like Q1 through Q3, well, even Q4, right? Like, we know the business is trying to right the ship, right? So if you're going to make all these changes and keep revenue flat, like, a lot of companies would kill for that, right? So if they could keep revenue flat, and then we saw the huge increase in net income for Q4, to me, it feels, Q4 is turning a corner, right? Like, they did it. So it's just, I know some of the articles will probably point out the full year is rough, but we know that, right? So for me, it is about point in time and trending, right? So it's just Q4 is such a strong reversal of prior, how many quarters they lost money, right? Like, it's just a big deal. And then, so I'm hoping they can carry that momentum into the next year, right? And then you're really looking at something.
Well, they lost $90 million in Q3. And so that means that they had about 200. I'm trying to see the number right here. The first 2 quarters. How much did they lose the first 2 quarters? I know you have it up on your chat, on your screen somewhere.
I do. It is the first 2 quarters. Yeah. What did they have? They had about 250 million loss, right? They lost 93 Q3, and then 1 and 2 $250 million. So
yeah. Okay. So for me personally, $250 million. Like, guys, if they can get Q1, Q2 correct, you're battling about $80 million. That's what you're battling. And they can make that. They can swing that. And what it is one-time expenses. Now, I saw all of the bad deals they did with their senior executives and having to pay them severance packages. Those bills add up. You had the infrastructure that was being built and being invested into for the marketplace, the distribution centers, inventory, and of course, a failed FTX deal. But when I look at it, I think they can get a lot of things right. And I think we can change this number in a big way. It's just me. $300 million, guys, is what they lost for the year. But no one's going to tell you that even though they lost $300 million, they had a cash influx of exactly how much over the year. To go up in cash flow just means that they're willing to take the loss today, but they'll make it up next year, and they'll sit on that cash. You want to sit on a mountain full of cash because cash burn rates can just increase drastically during these times. Certainly when the Fed's uncertain about what they're going to do. But if you ever want to look at cash flow get burned off, go look at other retail companies like Kohl's, like Best Buy, like Target, and like Bed Bath & Beyond. Those companies.
Yeah, Kohl's actually a good example of what not to do.
Have you seen them? Have you seen them?
Yeah, I did a deep dive on Kohl's, and I took a short position on them a couple months back because it was just, man, their balance sheet was just completely flipped over.
And right? Don't let me avert this whole live stream right now, because I'll tell you who's their advisors, right? Their advisor,
the Boston Group.
No, their advisor is Macellum, and Macellum, they wrote the letter. They're the ones. They actually try to sell off Kohl's to
that's right.
franchise
group. That's right.
But Macellum is the ones who wrote the letter to Bed Bath & Beyond in 2019 and put all the people on the board today that you see. Suga, the whole thing. Yeah, same group, same guy. His name's Jonathan Daskin or whatever the hell the name is, and he's the former guy from SAC Capital. Hey, Kohl's is not where you want to be, guys. Kohl's is going to go down the drain. They're going to be bought up by private equity, or just the same way Bed Bath & Beyond's transitioning, Kohl's is the same way. Believe it or don't. But all the board of directors for Kohl's are former Pepsi guys, Blackstone, and other guys like that, KKR, and you'll see them. Go read it up. I already read up on it. I just didn't do the video, but it's bad. It's bad. So anyway,
that's
cash burn over there was $1.8 billion for the year. Bed Bath & Beyond's the same way, same amount, 1.4, 1.5 billion dollars in cash. Target actually burned $6 billion cash this year, which is phenomenal, if you ask me. They should get an award for being the worst, but I just don't know how they do it. And I went and looked at Target, and there's a reason why Target doesn't exist, guys. Why GameStop is so successful. I'm going to turn this back to GameStop, just so you guys are aware. GameStop is transitioning to an e-commerce business. Like, that's the engine that's going to push it. And the individuals that mastered this, that became experts, was Ryan Cohen, it was Blake Day, it was Alan Adel, it was Larry Chang. So they really know what they're doing on the e-commerce front. Fulfillment center-wise, shipping and packing, and the in-source logistics, everything they do. I'm telling you guys, if you ever go look at a company like Target, their board of directors, they're basically all doctors. They have all the pharmaceutical bros. They have Procter & Gamble. They're not retail e-commerce crew. So the drastic difference on board of directors is massive. You might have a guy who runs Cardinal Health and some other, St. Jude's Hospital. I don't know who else is over there, but I know Cardinal Health's there. And you have all these doctors on the board of directors, but they're not running a retail business, an e-commerce business. And if you don't have that mindset, you're never going to know how to actually make a profit for your company. You're actually going to go ahead and go down with the ship. Hey, to each his own. So that's Target. But hey, back to GameStop. Hey, all our competition here. It's not fair running. Let me tell you something, Bears. I literally have looked up every single company that could be in competition with GameStop and broken down their board of directors, the leadership, what's the direction of the company, because I want to know who really can hang with us. And I'm telling you, nobody. There's no Amazon, Walmart. Okay, put me in the crowd. Put me in the crowd with those two guys. I'll do that. But they do it based off of numbers. They don't do it based off of actual, stepping over pennies to get to dollars. They just don't do it.
All right.
So, all right, that's enough of that. All right, we'll go down this list here. Here's the good stuff. All right, so the cash sheet. The consolidated balance sheet is here. You obviously understand this more than me, Kevin. So I just put that out there right now. Bring that dude to me, bro. A failed politician.
Too nice.
I made the video. I don't know if you've seen my video with him. I made a video. You should watch it. And I just explained to him that he's an idiot. But I did it, in really good detail. But so here's cash and cash equivalents. We're at 1.1. To have a net loss of $300 million for the year, and yet our net cash position, just cash and cash equivalents, is only down 140 million. I thought that was a really good idea of what they did with their money in the marketable securities to actually make interest on their money is crazy. But am I correct?
Yeah.
Am I correct that marketable securities only list for what they purchased them for, not what they're actually going to sell them for?
Yeah, you're gonna. That's a good question, right? So if it's marketable securities and you're gonna hold to maturity, then you're gonna book that at the cost, and you're not gonna do unrealized gains and losses, right? 'Cause you're gonna hold to maturity if that's what they've done there. 'Cause at least the footnote said they were somewhere between they're longer than 90-day maturity, but less than a year, I think, because they're listed in current. So they've got to be under a year maturity, right? So, but greater than 90 days, less than a year. So they would be booked at what they paid for.
That's awesome. That means they're going to make more money.
Yeah.
That's how I see it.
Yeah. So, I mean, it's every little, like, because business, so much of business is just about incremental, like, changes on the margin, right? So anything you can do, because it's hard, anything you do to get 1% to 2% extra, that's a big deal, right?
Yeah.
So I love the move. I kind of wish they'd done it sooner, but I don't want Sue to yell at me, so I'll leave it at that.
There you go. It's $250 million, brother. Hey, I just want to give a shout out right now to iPhone support, aka Data Zero. He's a failed YouTuber who I told him 2 boats and a helicopter, and he just laughed. And he's still buying Ape and AMC when it was like $8. And I mean, he had an argument with me one day, and I was like, "Dude, it's going down." He's like, "No, it's not." Yeah, well, go look at it now. But they put him on a timeout.
The balance sheet.
No, he doesn't look at the balance sheet, bro. He looks at crayons, and he's like, "No, Marantz, you don't know what you're talking about." Okay.
Oh God, y'all are crazy. God, y'all are crazy.
That balance sheet is wild, bro. AMC's
yeah,
balance sheet.
If you want to see what not to do, that's a good example.
Yeah, just go crazy. Go buy some popcorn. All right. So, marketable securities. So we understand that GameStop is actually doing the right thing on these on this cash flow statement. We're going to dive into merchandise inventories, but first, I want to also touch on something that's not here yet. I know the 10K is not here yet, and everybody's talking about speculation. I just want to talk about that for a second. What is your theory on the 10K not being here, and what could it mean? I got Bed Bath & Beyond telling me it's because they're buying them. I've got AMC saying because they're teaming up with them, and then I got GameStop just saying, "Hey, man, we just didn't file it yet. Chill."
Yeah, give me 3 minutes and I'll walk this. So,
You've got
I spent like 5 years in the accounting department for like a global 100 company, right? And I understand the concepts. If we start talking SEC regs, and like I'm gonna get a little fuzzy, but big picture, like an accounting department is judged partly on turning out results the same time each quarter, each month, each year, right? So there is a schedule that you adhere to publish these figures, all right? And the way this works is what the figures are like probably 3 or 4 days after close, or like we closed on a 4-day cycle. Like it was really aggressive.
Mm-hmm.
But it takes the next month to get all the footnotes in place, to run all the year-end testing, to get management comfortable, to get auditors comfortable. Like it is a monster deal. Like the easy part's just literally getting the numbers. The hard part's the rest, right? So when I see that someone's a couple days late, like I kind of give a pass to that, because like if you think about GameStop, it's a $6 billion company, and most transactions are probably in the $30 to $40 range. That is an enormous amount of data to aggregate and then go test and blah, blah, blah. So that being said, I don't put a lot of weight into this being a couple days late. Like, I mean, stuff, it's kind of like a high performance car, right? Like it's great when it runs, but man, she's on the edge, right? So now, because if we elevate to getting to an NT, like an NT is a big deal, and I feel like, and always double check me, like there needs to be some major business thing to get to the level of an NT. And we went through this with Bed Bath last year. Like I got lit up for saying that, it was late, probably because of, just the going concern thing, right?
You said an
everyone
NT?
Googles it. And sorry, what?
What were you saying, an NT or MT?
NT, N as in Nancy, T as in Terry.
Yeah.
That's when you file late. You have to file an NT to say why you're late, and then give rough figures, and then you file the actual the statement later, right? So
I don't invest in companies that have ever been that late. That's why. So I'm sure the terminology's out there, but I've never heard of it. I know they have to file. I know they have to, like SEC and ask for an extension. I know all that part, but I usually don't invest with companies that way. So it being late, some people are saying, it has some stuff in there. But for me, it says the deadline is the 29th of March. So we will get it this week. Yeah, we'll get it this week. Let's go for the 28th. Let's go for the 28th. That's my mom's birthday, 28th.
It's fine. Let's just wait. It's fine. There's nothing to, because it's, if again, like always double check me, but like, I don't think they're going to be past a deadline. And if they are past a deadline, it's got to be for something pretty substantial, other than like, nah, bro, we have problems. Right. So, well, I'm kind of a wait and see mode. I don't really put much stock in it being a couple days late.
That's cool. So no Bed Bath & Beyond merger? No?
God, I hope not.
Okay. I'm just asking.
Oh,
These guys,
please,
hey,
no.
on a different front too, just so that we can clear up the FUD. If they were to buy Bed Bath & Beyond or invest into it, would that do anything for those investors? Or, I mean, in my head, I don't know what the hell's going on over there. But yeah, it's fine. I
don't even know.
Yeah,
I'm the wrong guy.
No, you're good. You're the right guy. Hey, so the other part on this, the 10K comes out. It's going to tell you that currently cash cards, i.e. gift cards, are liabilities until they're actually exchanged for cash or product. So I think that also takes away from what we're doing. We'll have more. We'll have a added line for that revenue coming in for the next quarter. And usually we have an influx on quarter one because everybody got gift cards during Christmas, and then they use them for whatever games are coming out in the future.
Yeah.
So I'm excited for that too. There's a good little portion there, a couple $1,000,000, and hey, at this point, a couple $1,000,000 are swinging in the right direction. So let's go ahead and talk about this now. Receivables net allowance of $2, $3, whatever the hell, 2.2 and 3.3 respectively. Now receivables as they come in, how does that actually hit our line?
It's a good question. So when you have a sale on a receivable, right? So let's say you sell a $100 game on a receivable, then you increase revenue by $100 and you increase receivables by $100. Okay. And then when you actually get the cash, you're going to increase cash by the $100 and then you're going to decrease the receivable by $100. So I'm a little so with a retail company having this, but for a retail company, most of it's going to be cash register, right? Point of sale. So I had to dig into like why there's so much. 153 million seems like a lot for stuff that should settle instantly, but I mean,
it should be like cash and carry type deal. Yeah.
Yeah, like because it's retail, right? Yeah. So you wouldn't expect to have a big AR with retail. But basically, when you sell something on a receivable, you get to recognize the sale immediately, right? And you just book the receivable, and then you swap the receivable for cash when the cash comes in. And this is to your gift card point. If someone buys like a $100 gift card at GameStop, all that does is give them $100. It is helpful because it gives them $100 cash to use, and it puts a liability on their books. And then when you go to actually buy the $100 game, that liability turns into revenue, right? But gift cards are a good way to just kind of pump cash in the company
and hold it.
That's a good point.
Yeah. I'm always paying attention to that stuff because you know, I look at little things. But an increase on receivables by 12 million. That's cute. That's huge. The influx on merchandise inventories. If you saw, they're trying to tell us that you have to have a negative in inventory for it to be great. The fact that it's a big positive means you got a bunch of junk you're trying to sell. I'm just using the words that were used to me, okay, that I was told. GameStop selling junk. So to go from 915 to 682, I think that the buyers are figuring out this seasonality of what GameStop is. And I think over time, that number gets more flush to even. But still, it's an increase from previous quarter, as in quarter 3, we had built it up to 1.09. I think it's 1 billion and 9, right? If I'm not mistaken.
Yeah.
Versus the 1.1 of the previous year, 1.121 or something. I can't remember. Billion. It was something like that on inventory. So I think we're doing better every quarter.
Yeah, let's talk about that. So inventory, when someone's calling inventory junk, let's talk about that. Because so with a retail business like this, the revenue should flex with the quarter, right? Because GameStop said that traditionally, roughly 40% of the revenue comes in at Q4, right? So if I'm GameStop, Q3, I'm going to load the shelves up and then liquidate it all in Q4 for the holiday season, right? Now, if I'm trying to make the argument that there's problems and it's junk inventory, the first place that would appear would be my gross margin would be down. Okay, So if I had too much inventory, and I got to just clear it out a la Kohl's, then I got to get on TV and blast it out there like 70% discount, 50% off, right? And then you're going to see it because the revenue will pop because you're clearing stuff out, but COGS is popping with it. So then your gross margin is going down, right? So we know it's not fully a fair statement because gross margin actually increased 5.6% on 16.8%, which is it's a pretty big increase. So you'd first see it in a degradation of gross margin. And then if it continues to be an issue, then what's going to happen is management is going to come in and start writing the inventory down, right? So you'll see like excess. You're going to see basically a lower of cost or market adjustment down. And then when you know that's happening, that's when it's like really hitting the fan. And then a third indicator would be my inventory turnover ratio is also declining as well, right? So my inventory is sitting on the shelf longer because I can't turn the stuff over. So, and we know that, with GameStop getting inventory back down to like, I think 680, right?
Yeah, 682.
For into 682, when historically we bounced around between like 500 and 700, 800 million. Like, I'm fine with it. And I do think there's room for it to come down because inventory is risky, right? Because you want to carry just enough of the right thing at the right time in the right place, right? So to me, it feels like they could actually bring this down if they can get tighter with the sales forecast, and then the distribution center is getting better about moving stuff around quickly. Then I can have less cash tied up in inventory and then pump up my cash maybe from like 1.4 to 1.5, 1.6, and then you can turn around and do more productive things with that cash, right? So,
so I'll give you some.
Yeah, I think I didn't.
Yeah, no, I hear you. I'll give you some. So the theory was that, and this is according to Meet Kevin, of course, that the inventory number is coming down, which is great, but the margins are only down or up in this case. Like, the margins are really wide because they are selling their junk, right? And I don't know. He says, how is this possible? That means they're not buying inventory. I don't think it's that. I think you have to buy inventory because the industry we're in, like, it's literally we're releasing new product every week. There's new titles coming out, so you have to churn that inventory. But what I think is that the resale environment for GameStop has really fine-tuned what they're doing. I went into one, and I was so amazed at the kid behind the counter. When someone asked for a game, he said, "Hey, I have it here. It's in the package, but I can sell you a refurbished one." And he gave him that quote. And I was like, in my head, I'm thinking, this kid has no idea what he's doing for the margin. He's literally doing exactly what you want to do. You want to offer them the same said product, but let them know that you do have the available product this way. And those margins on the resale are huge. They're massive. So if they're incentivizing and or training their employees to be better salesmen and selling that inventory that is sitting there, that pre-owned, that's phenomenal, because that's what could offset the cost of goods where people don't understand the margin there. When I think of clearance and you go there, their clearance section is the smallest section in the building. It is like one little bin. And that's because I think they figured this out. And they learned a long time ago. You're going to get lost in size. And listen, you go to that clearance bin, guys, it's literally clothing. It's literally clothing. And here's why. Because size and color is the one thing that you can get lost in inventory. You might have the hottest product in the world, but you don't know the size and the color that people are looking for. Certainly, if you're selling towels, if you're selling anything that comes with options, minimal options means people have to make a decision, and the decision is 1 and 2. You don't need 20. You don't need 15 bags of popcorn. I promise you. Give them one option. Yeah, I take stabs, whatever. I just understand this shit because you're looking at it, you walk in, and you understand exactly what I'm talking about, guys. Go into a damn GameStop, please. Don't just invest in the company. Like, people buy stock at companies, and they go, it's going to go up, and they've never been inside the store, or they've never even used a product, or they don't understand what the actual company is trying to do. So I love what they're doing with their inventory. I respect it. The number's huge, $300 million in the opposite direction. Just know that GameStop's cash increased over the last 2 quarters over $500 million on cash and cash equivalents. People need to know that number. That's a $500 million swing in 6 months, and it's real. And
it's real, and it's
great. Go ahead.
Yeah, it's crazy. No, it's crazy. It's crazy how I do really admire. I do think it's a really strong balance sheet, because I did get some comments or questions about, a downturn, right? And so when you look at balance sheets, you're really looking for, I think, at least for me, because most of my career has been like just distressed environments. Liquidity and solvency are the thing, right? So liquidity is like, I want to make sure I can pay all my bills, right? Well, good God, you got 1.1 billion in cash. And I know that there was comments about current liabilities being debt. And I didn't think that was it is short-term debt, don't get me wrong, but it's debt generated in the normal course of business, right? So it's always going to be there because you're always turning it over. So it's kind of like if you're making $2,000 a week and you put $500 on your credit card for materials, at the end of the week, you're going to clear the 500 off and put it right back on, right? So it's constantly rotating over. Yeah. It's a churn, and it's always going to be there until the business literally, it's only going to, until you shut it down, right? So it's the long-term debt, which is a different topic, because long-term debt is something you service above and beyond the normal short-term debt, which is current liabilities, right? And then when you're looking at liquidity, you're really looking at current ratio and quick ratio type stuff. And you can see, like, for GameStop, they've got 2.3 billion of current assets against 1.3 of current liabilities, which is roughly 1.7 when, 1 to 2 would be in the normal range, right? So if you're running it like current assets basically equal to current liabilities, that's a bit riskier position to take. And you can do that if you're like the Targets and Walmarts of the world and you're just generating huge cash, right? You can just pay it off, whatever. If you're trying to be more conservative, I'd go closer to 2, which is what they've done here. And if you take the more strict quick ratio, which just literally looks at almost basically just cash equivalency, I think that's still above 1. Yeah, that's at 1.15, which most companies are below 1 in terms of liquid assets to pay the bills, right? Because like if I'm probing for liquidity issues, I want to be pretty strict in like, does this company have like cash in the nightstand to pay the current debt, right? Because if you don't have that, that's gonna signal incoming problems to maybe go short on something, right? So, but again, this is actually conservative, right? They could do a lot more. I sleep better at night on no debt. Like, I'm not debating that, but and on long-term debt, it's going to vary by industry, but typically 1-to-1 on long-term debt to total shareholders' equity is kind of the thing, right? And
so
28 million against
exactly long-term debt
against 1.3 billion.
Yeah, they're crazy.
So even by it's just crazy. So a knock against GameStop is they probably say like, well, it's too low. And like, yeah, you could say that, but in this environment, until I'm consistently profitable and the economy shakes out, like, I'm okay not being as efficient with my capital structure because I'm hoping to get even and survive, right?
So here's what you do. And just so you know, like, you're tracking on the right direction here. Most people that want to invest in a company, they want to see debt on the books because they want to see that you're trying to grow, like you're a growth stock. And for us, it's not that we have this growth sector that we're trying to get into. We're more about value. What's the value of what we are? And if you can show Wall Street that this company on a small scale has the ability, okay, not only the ability, to actually have the cash to do it. Okay, so I mean ability as in the people that are able to do it. But if you give them money, if you give them more money, they could make it on a larger scale. So scale and ability, put that word together, put that phrasing together, actually works here. So as I look at this balance sheet, I see they have not risked anything more than the $28 million that they have on long term versus the 1.3 that is your money, shareholders. Understand that they literally are not using their money with the best case scenario, as in we will expand 3 years from now, 4 years from now, 5 years from now, when inflation rates are down, interest rates are down, and the economy shakes itself out. You're in a macro period of 5 years distressed. Those guys will all fade away, and then you're going to get into that up and to the right mentality where your stock's always going up and to the right. And I'm excited for it because I know what can grow and what can happen with this investment over time. The biggest problem, this is the biggest detractor from it, is we talk about it every day. And we talk about it every day. We look at it. We hang out every day. Guys, I know that it's something for us to do. Trust me. Guys, I'll go away for a week or 2 or 3 or 4 or 5. My wife would love it if I shut down YouTube. And I'll tell you what, I don't need to be here. But I'll tell you something. Some people need reassurance. Some people need guidance. Some people need to walk them through this walk right here that we're actually doing, Bears. Because as you read it and you see it for what it really is, there is no risk In my opinion, there is no risk currently for anything notorious, nefarious, irregular to happen to this company because they are so well mannered. And what I mean by that is they're not in a hurry to get there. There's no one rushing to the table here.
Yeah, it's a great point, because if I'm looking at longevity of the business, right? So I've got current assets way in excess of current liabilities, and if I get to a place where we're operationally speaking, breaking even to positive, then I mean that's almost like you can do that in perpetuity, right? Because like most businesses go the opposite direction, which is you're going to leverage it, try to generate the additional return. And then if you don't generate the return, that's where you start digging your hole, because you're not making money on your core business. And oh, by the way, you're paying interest expense. And oh, by the way, the debt's coming due right in a couple of years. So you're on the wrong side of it, and it's just, this is a much more conservative approach to growing a business by keeping this much liquidity against a little bit of current liabilities that you're rotating over, right?
We're a startup. we're the best startup in the market. How are we not the best startup in the market? You're looking at guys who refuse. This is the best part about this company. We're running with billionaires. You're running with bears, and we're running with billionaires. And they literally don't need the money. They don't need it. They're not looking for it. They're not rushing for it because they're creating wealth. And it's not just for themselves. It's for everyone involved. I feel this way only because I can explain it. This balance sheet explains to everyone. Guys, GameStop has $1.4 billion cash and the ability to borrow funds to go crazy if they want to go crazy. And they're not doing it. They're not doing it.
Yeah.
They're sitting tight for the right reason and for the right moment. And when this shit hits, brother, it's all right. I'll keep buying mine.
It's valid. It's valid, right? Because like when you see the headlines and they talk about the balance sheet, like it's important to know like why some of the stuff isn't as fact based. And that's, if this thing wasn't being run right, then like current cash, they would have already dumped it into something by now. Long-term debt, I would have leveraged this thing way up higher. I've run up my inventory trying to see what works, so how I can generate, some sort of revenue off this inventory. I did see a comment about the other person talking about how hardware stores were up in Q4. Like, well, the math doesn't, I don't feel like the math works there, right? Because I know hardware sales are lower margin, but my margin increased by 6% on 16%. So I can't have my category where my low margin items is increasing, but my overall margin increased on flat revenue, right? Like that
doesn't make sense.
I struggle with that. Doesn't make sense to me.
The only thing that makes sense to me is the refurbished program. We have the number one guy, Randy Still. He comes from Apple. It's a refurbished program that they put into place, and they're willing to sell you those goods, and they understand how to market them. So I love it. I think that it's an incentive, as I see. Let's go ahead and look at this one here. This says the accounts payable, accrued liabilities and current liabilities, current portion of operational leasing liabilities. As you can see, they've decreased over $20 million, essentially. $16 million of the operational leases. And I know they touched on this with Meet Kevin. 16 million, people don't, that's not a lot. No, it's a lot. When your profit's 49 for the quarter, 16 for that quarter versus what would be, I just want to make sure I have this right. Hold on. Let me go all the way up. Yeah. So this is balance sheet in millions. This is year over year. Is that correct that we're looking at? Yeah. Whole year.
Yeah, it's year over year.
Yeah. So we've actually shrunk it by $16 million. Okay, guys. When you look at liabilities versus what it costs to do business, like for us, you're going to see an increase on profit because these liabilities are coming down. And I know they only came down 20 million for the year, but we know for the period we had a huge swing our way. I think that's what helps out when they say CapEx, those expenditures, that fee. This is why we don't own the buildings. It's why you lease them. Because when you lease them, the actual rental company, whoever may be in charge of that, they actually front the impairments on the buildings themselves. It's not that we take the charge. So getting out of those leases and not renewing them because of the rates the way they are right now, this is the best time to downsize, in my opinion. But I'll let you speak on it.
No, it's fair. It's it's just, there's just not like this, objectively speaking, this balance sheet's strong, right? Because if I want a strong balance sheet, I want a current ratio close to 2. I do want some fixed assets, but then again, in real estate or retail for this sort of thing, I like the operating lease thing, right? Even then, like the operating lease assets is in excess of the operating lease liabilities. So that part's fine. We see a positive shareholders equity amount, which means that, we haven't been incurring sustained losses. So that's solid. And, there's just no debt, or no long-term debt, I should say. And that's just, that's key to surviving this.
Check it out, Bears. I have you in my ear, so my wife can't hear you, okay? But my wife just asked me, she goes, hey, babe, are you guys almost done? Yeah, we're almost done, hon. We're getting to the bottom of it. We're going through it.
Yeah, we're on the cash flow statement.
She's hungry. We're at the cash flow part. She's hungry. I'm hungry. I haven't eaten today. It's our anniversary, 10-year wedding anniversary all weekend. And we celebrated at the concert last night. Now we're going to figure out today, probably take her to lunch, go do something different. And because usually I'm just playing League of Legends and making videos for people. Nobody wants to see my videos today, so we're just going to do this video and call it a day. But let's go ahead and talk about cash flow. So net income, God, it's so beautiful. You guys see it right there. As we look at the adjustments here, I'm going down this line by line. I'm just seeing if there's anything that looks at me kind of weird. Asset impairments shrink all the way down, as you can see that. So we had a net cash flow spot on this right here. So the swing is $400 million. Am I correct on that?
Yep.
So in all your days, a company that's been in business for 20 years that everyone's written off, have you ever seen something so crazy?
I mean, it's for a year change. It's wild, man. Good. Yeah, this is, like I did, so the Q3 cash flow statement was pretty good, right? But it was kind of some mixed things in there. And because it is a risk, right? Like when you load up inventory for Q4, there is a risk that you won't convert that to revenue and then you're stuck with it. But given this is so cash flow positive, because I did see some things about GameStop's not paying their bills, GameStop's not loading their inventory up. Right. And if that was true, you can go look at historicals and see, you can check the inventory balance. The inventory balance should be back in line with historics. You'd also want to check the AP balance. Is it higher or lower than what it's been in the past? And it's back down to historic levels, right? Like, could it be a little lower? Yeah, it'll probably come back down further, because the thing about these one-time balance sheet pops to cash is that they almost always reverse the next quarter, right? Because if you don't pay your AP this quarter, it swings due to the next quarter, right? Yeah. It swings over, right? So it's true, right? So I said it
to me, Kevin. I'm sorry to interrupt you, but I said it to me, Kevin.
No, you're fine.
He said it was look at this debt, and I was just like, what are you talking about? The previous quarter we had even more. Why is it not 800 million plus the 500? Why are we not sitting at 1.3? Because we pay our bills month to month. That's all it is. You're just swinging over your operating expenses. That's it.
Yeah, I mean, if you want, and this, we're starting with positive net income, right? Which the key to the key to free cash flow on a sustainable basis is you're starting with positive net income, because you can make it up on balance sheet movements, but they're generally one-timers, right? Because they almost always reverse out the next quarter or subsequent quarter. So, to me, this looks like we know it was a successful holiday season because gross margin came up on flat revenue. And then I was able to pay my AP bills because I paid them back down to historic levels. And I shrunk my inventory back down to where it should be. They roll into Q1. So this is pretty textbook, to be honest, for how to run a holiday season.
So I see a drastic change here on the stat line. Obviously, merchandise inventories were up about 200 something million on what it was from 215 to 474. But if you look at the accounts payable and accrued liability side, you see that we actually paid an additional 200 million. Am I correct on that?
Yeah. So what this says to me is that, they loaded up that much more in inventory and they're able to liquidate it back down, right? Because when inventory grows, AP is probably going to go with it. Because AP should be mostly your vendor stuff used in support of revenue, which is your inventory, right? So these numbers should kind of move in tandem. So if you're growing your inventory, AP is going to grow with it. And if it's shrinking down because you're liquidating it, then I'm going to turn around and pay my AP back off, right? So kind of do that number. Yeah.
Yeah, I got you. Yeah. That's perfect. As you can see right there, operating lease, rights of use assets, and lease liabilities used to be 17.2 last quarter of that year, last year. Now we had a swing to 2.8. So $15 million swing there. If you see that line, do you see it?
Oh, yeah.
Bears? So on the operating lease, rights of use of assets and lease liabilities. So a $15 million swing, guys, that's a massive number. It's a big ass. I'm sorry. That's a big swing for us. Just like deferred income taxes. I don't know why that would be so drastic from the previous year. But I think what you're saying here on the cash, if you guys don't know what he's saying on the cash influx side, is your net income is where you want to start, right? So if you go all the way to the top, just know if your net income is in the negative, it's hard hole to dig out of. And you're looking at GameStop. They've managed to go positive. They're not doing any tricks. There's no glitz and glam on this balance sheet. It is pretty straightforward for me. As you look at cap expenditures right there, that's what we were talking about. Some companies will say, hey, we're going to do things in-house, right? So I'll give you an example. I have a store director, and they want to buy some dividers and some, I don't even know, you buy some tape and buy some other things, and they're going to fix up some stuff around the store. That's internal expenses. Cap expenditures would be like a cap expense. It's something that you actually send off to corporate. You say, hey, we want to reformat this whole store from the ground up. You guys buy the tile, lay out this, bring me a contractor in here. And cap expenses can help with the upkeep of your facility. And what they're doing is you've seen them. They've gone in and they've refurbished some of these stores and they've redirected them, and they look different. The layout's different. They look clean. They look sleek. That costs money sometimes. But to say that they're not using as much, well, they shorten the footprint. That's one, okay? And for what they have used, $11.6 million in a quarter, that's a lot of money to me. It's a big number to me. But anyone who says that that's not, they're lying to themselves. And that's still great.
Yeah, it's a great point. Like, so like these cash flow statements, and I've talked about them in other videos where I kind of walk it, but big picture, you're trying to, change in net income doesn't correlate exactly to the change in cash, right? Because accounting is on the accrual basis. So what you're trying to do is like, why did my cash change? And this statement tells you that. And the big thing for most companies is going to be free cash flow, right? Like, I'm an accountant. Like, I love free cash flow. Like, I think EBITDA is often used as a proxy for cash change. Like, I really don't like EBITDA. So when you're talking free cash flow, you're talking the change in cash from operations minus the change in investing. And big picture, what you're trying to get to is I'm trying to get my business, my day-to-day business, to generate cash that I can use in CapEx spend, which will then turn around and increase my revenue that generates more cash that you can turn around and generate. So it's kind of a circle, right? So positive free cash flow is what you want, and they got it here. Granted, operating is a little higher because of the balance sheet movements, but there's positive net income, right? And like at the end of the day, like I should start with my analysis with a cash flow statement because like it's the thing, right? Because you can dress up a P&L pretty easily the way GAAP is, but like cash flow statements are hard to fake.
Yeah. And then right here, you'll see that their expenses were $19 million. They spent $4 million less than the previous year. But what was spent was the purchase of marketable securities. So it is not what you guys think. The cash they're spending is they're actually putting it away for a rainy day. And they weren't doing that before. And if people only knew what that means, because you'll see that they actually returned $27.5 million on those purchases from previous quarter, guys, they're making money. They're letting their money make them money. It's actually quite laughable. But that's awesome for me. And let's see.
Love it.
Yeah, go ahead. Oh, you love it. You love it. Okay, that's good. No, you love it. I love it. Apparently, we're two 40-year-olds here. Right, we're two 40-year-olds. We're in the chat.
I know, I'm 17 now. That's super
you
flattering.
Look so young, they said. Yeah, it's because he runs a lot, guys. You guys see what I put his picture in the front, him and Molly. That's his dog, Molly, 3 years old. Molly is getting the love of the man without the hat. See, we get the guy with the hat. And that's how it works.
No, it's all because of my wife. My wife takes care of me, so I would have been dead a long time ago.
I hear that, brother. All right, we're going to jump down here, guys. Cash flow is here. This is year versus year on cash flow. So, yeah, net loss on GameStop. Oh, so drastic. But as you look all the way, and I went down all these lines already, but loss on retirement of debt was 18.2 last year. This year, 0. I have no idea what that is. So they retired their debt, I guess. I don't know exactly. Is that like a I have the make whole premium charges they do whenever you pay off your debt. They add a charge to it.
That's a good question. It's good. If it's a retirement of debt, either they got some sort of forgiveness or they paid it off, right? Mm-hmm. Without digging too much into it, that would be my guess. But somebody needs to verify me on that.
Yeah, that's fine. Stock-based compensation expense, obviously it went up because they're paying their storefront, their store managers, which I'm good with. I'm never going to get mad at that. The gain of sale of digital assets, you'll see that there's an impairment charge there for $34 million. It's a one-time expense. That one-time expense that could be the FTX deal that fell through. I don't know for certain because I haven't read the footnotes on it, but I will tell you guys, $34 million is going to swing the other direction. That's how I feel about that because it won't be there next year. I look at all the one-timers, I get excited, brother. That's just me. Merchandise inventories.
It's good.
Yeah, we were in the negative on inventories last year. That means we were stacking. We had a whole bunch coming in. We have $229.6 million to burn off for whatever reason, but it's fine. I don't get mad about it because we are in that business. But look at the net cash flow section. This is why I said it's $500 million swing. Or negative $400 million the previous year. We're positive $100 million now. Just say you're bullish. We won't tell. No, he is bullish. What the hell? He's long as hell. He's long as hell. And I don't know why.
I think the way
you presented it. Yeah, because the way you presented it with Suit. Listen, Suit. Let me tell you guys something about Suit. If you guys don't know who Suit is
I love the guy.
He's the resident bully. No, he ain't a bully, but he runs on Discord, bro. Suit walked into Discord. He never been a part of our channel a day in his life. He walked in and says, "I'm here. I'm here." That's all he did. So, shout out to Suit, man. He's awesome for us, and he helps me out so much. He sends me so much information, and everybody does. All you guys send stuff, so I appreciate everything. I know who he is. I know you do, Lynn. Come on, yeah. We all know. Running with Bears is really. He's really here just to be for GameStop, and he was laughing at Bed Bath & Beyond, bro. I don't know how we found each other, but I know how we found each other. But I don't want to talk about it. But your boy PB Seeds, man. Yeah, your boy PB Seeds, man. Those guys, I've never met. I'm gonna say this very candidly right now. Out of the group of Pete the non-pilot, ABCDC, whatever the hell his name is, and PB Seeds, all these guys literally are the worst investors in the history of YouTube, and that's hard. That's hard. They should get a crown because it's hard to do it that way. But they're buying something at 70 cents and telling me it's going to go to $50 a share or $80 a share or whatever the hell. They're not even buying the shares. They're buying calls. So I don't know what the hell they're doing. And one guy was bragging. He said, I bought 100 shares today. And I was like, what was that, $7? I don't know what the hell. I don't know, $70, whatever. But you get where I'm coming from. So I'm happy we're here together, though, right now. All right, so here we go. No, all right, Bears. Sorry about that, man. I just had to give you a little love, but also tough love because you are who you hang out with, bro. And you were hanging out with those guys.
I know. I just want to show the math. Like that was my thing. Like I just want to. And he had because when I made, to his credit, like when I made the post, my post was like, "This is going bankrupt."
Yeah.
Right. So they still have me on.
It's still going.
And I just got kind of I got caught in the crossfire. And like, I just want to talk. I just want to talk the balance sheet.
Yeah. It don't matter, bro. It's still going bankrupt. I don't care how you do it, or it's going to be bought out by private equity. There's no way. Guys, when I tell you I'm digging deep on part 10, you want to tease? Do you want to tease on it? Do you want me to give you the tease? Do you want the tease?
Oh, sure. Let's hear it.
All right, I'm going to throw it to you, okay? Watch this. I'm going to tell you guys something, okay? This is a tease on part 10 of Connecting the Dots. We're on a live stream. This is not a set video for, like, GameStop earnings or anything like that. This is just a live stream. Hey, check this out. There is a company, okay? You're going to love this. There is a company that Bed Bath & Beyond hired. And until you know who that is, and until you go through it, they hired them for their CEO search, which we now know was a piece of shit search because all they did was go ahead and promote Sue Gove from intern to permanent. So the company they hired is in on the deal as well. Now that company they hired, oh man, what is the connecting dots with them and private equity? I wonder. I wonder who's setting this shit up. Don't worry, I'm digging for you guys. You guys are gonna love this shit. And can I tell you this? This is how excited I get. I've only checked out one guy in the company, and I already connected him to it. So I was like, well, I'm one guy in, and then you text me, and you're like, hey, Marantz, let's go live. I was like, all right, let's do it. But yeah, I'm one guy in right now, and I already know. I'm just like, yo, you guys have no idea what I'm about to put together. So I'm gonna have to do it after I give my wife some lunch and stuff. But let's go ahead and look at this really quick. We're almost done here, guys. Apologize. I know Bears has to go. Bears like, I'm running, bro. I gotta run. All right. So here's the bottom here. I'm looking at all the cash. We look great. I know we did a share offering previously to get our cash all the way up, and people were like, well, you only raised money because you sold shares. And I'll tell you, even without the selling of the shares, this company makes money. And they're making money, and that's what the balance sheet tells me. But here's the sales right here. Collectibles, percentages are always going to fluctuate because it has to always equal 100%. So if you drop 2% here, 3% there, and you gained it, it really doesn't matter because it's the net dollar that I look at. Remember, we came in flat. And hardware and accessories are up. If they're up, I don't know how the margin goes up. That's the deal. That's the math that works for people. If they only knew. Because if you're selling PlayStations, they have a fixed price. And that fixed margin is built in. And it's the same that it has been for previous years. So what exactly are they pushing, and how does it inflate the margin? It's got to be collectibles. Because if your margin's up, your collectibles are up. From quarter to quarter, we're up about $40 million from last year to this year. So there's margins to be made in collectibles, in my opinion. But go for it.
Yeah, I like to see. I'm hoping we get more explanation on the 10K, right? This one's tricky because if hardware is actually up, but my margin's not as great on that, if it's below 20%, that would bring the average down. And software is also, looks like this is down year over year, right? But maybe the profit on that would have the margin, but collectible is only up, but not enough of the total.
Yeah, the total cost of goods increase.
My hunger's
yeah, the total cost of goods increase was like 80. I don't even know, 90 million. I don't know what it was, but I know exactly what you're saying.
Yes,
I'm just saying.
This one's like there's some tricky stuff in here. That's what it feels like.
It's that refurbished program, brother.
Yeah,
that's where they're coming from.
Yeah, I figure if you're coming in all hot off the used stuff that's got greater margin, that would pump up the margin within the category.
Here's another thing, okay? I've looked into financials of numerous companies, and some companies don't tell you who their buyers are. And what I mean by that is, what if, and this is a what if GameStop is, they give you money for your phones and your tablets. What if they're reselling them to Apple, to Samsung, somehow, some way, or to a third party for parts and pieces? They have to have an avenue to get rid of this stuff. And I don't think they're selling them to retail in the store, because I only know this because of when you look at companies like Sam's Club and Costco, their return policies allow them to bring in and they get credit, full credit, and or there's a disposal that they get, a recycling fee they get. There's so many other things you get on the backside, but you can also third party it. And so I wonder what GameStop is doing with all their non-selling products, if they know how to dispose of this stuff. If you get a spoils allowance, maybe, something to that effect, and for the lack of a better term. But that's how I see it.
Good question.
But I got to look into it. I got to do some homework, and no one's going to tell me. No one's going to be like, "Hey, Marantz, we got to deal with Apple, and we're buying all the phones back, and they're just old phones or whatever." Because that's the only way I can see it. I don't know how the margin is so high, and yet the sales are flat. Like, they literally are getting that, they're that much better. And Kevin's explanation does not make sense.
Yeah, because I went back and looked at Q4 because I was like, okay, well, maybe our Q4 starting point was artificially low, right? Mm-hmm. Because if I took a bunch of write-downs last year, it's easy to pump up on that. But even then, we look at the note, when the foot management discussion, they were just like, well, we sold more consoles, which drug us down like the 16%. So then it's like, okay, well, that's a normal starting point then, roughly, right? Because we know consoles aren't great. So to me, they had to get slightly better across the board for if I'm flat on revenue and I did more consoles, which are lower margins historically, and I did less software, which is also supposed to be higher margin, but there's less of it, there's something. right? That's actually pretty interesting. That's not as straightforward as you.
So we'll how about this? To be continued on that.
Yeah.
This last part, guys, is going to be the SG&A. How I'm very excited at the fact that it came down to $80 million. Year over year, it's going to be even lower next year. I know we came in only about $4 million less, or 29. Well, how much was it less? I can't see.
540 less Q4, right?
So 16. Oh, I'm talking about the whole year. So 1681 versus 17. So yeah. So maybe around 20 million, 28 million. That's not crazy. That's not all the cuts that we've done. It would reflect there, but I'll tell you, it's going to reflect after quarter one and quarter two. I know it. I can feel it in my bones, and I'm very excited about that. Oh, brother, I'm telling you, I'm so excited, and I just can't hide
I'm excited,
and I'm about to lose control, and I think you like it. And I'm so excited.
Nice.
And I just can't hide
showing our age with this one.
Hey, bro, I'll sing every song that we don't know right now. Hey. Anyway, guys. Hey, you guys saw the balance sheet. You guys understand it more. Hopefully, you guys understand that GameStop's looking strong. I want to see this right here. This capital expenditures. Yeah, so cap expense, what we talked about. So GameStop did use $55.9 million versus 62 last year. It's not a huge drop off. They're still improving stores. They're doing great things. But as you can see, the net cash flow that comes from those is in the positive on our side. If you look at you see this? $496 million. There's a swing. There's a swing on cash flow. And I would tell you on the cash flow side, if people do not recognize that we had a $500 million swing, $550 million swing, they are blind. If you told that to Wall Street, hey, I got this company and they just swung $500 million from year to year, they would say, how? Certainly during this environment where everyone's scared to invest, scared to spend money, scared to walk on water. But guess what? Ryan Cohen's walking on water right now. Matthew Furlong's doing the deal, and I'm going to still be here bringing on the shills and battling them. But I got here running with Bears. He's not a shill. He's the real deal. And I just want to say thank you, Running with Bears, for coming on the show and the channel with us.
Man.
Yeah, always, man.
For sure.
It's let's put him on the big screen, guys. Give this guy a view here. All right. I want you guys to do a couple of things, okay? Listen. Running with Bears has his own YouTube channel, okay? And I'm a huge supporter of content creators when they start out, whatever they got going on. No, he's not drinking beer at 2 o'clock in the afternoon. So whatever he's drinking right there, it's not a beer. Second thing is this. He has a YouTube channel, guys. Go follow him. He breaks down balance sheets religiously. He's got them all out there. You guys can watch him. He's got some editing going on in there, some flames. I've seen him put a lot of effort and work into that stuff. Obviously, I live stream as much as I can with you guys and put videos up. But I'm telling you guys, GameStop's strong as shit to me. But I want you to give it a spin. Tell me what you got. I'll give you the parting word there, and then I'll close the show.
No, I appreciate it. I think, even from an accounting perspective, right? The balance sheet, it's liquid. There's no debt. They turned a positive operating income on flat revenue. The cash flow statements, we're back up to 1.4 in cash and cash equivalents when we peaked at 1.7 for June 2021. They said they're going to be full year profitable. Like, I would love some guidance, but I'll take that at face value. I'm excited for Q1, right? If we can get the revenue up, like, I think it's solid. I think a lot of companies would kill to have 1.4 in cash and cash equivalents with no debt right now, right? Especially considering everything going on. That's exciting though. I appreciate having me on. It's been fun.
No, I appreciate you, sir. And if you want some guidance, I'll give it to you. Buy GameStop. GameStop. Can't stop, won't stop. GameStop. I'm going to see you around, millionaires. Hey, and for everyone else in the chat, I know I want to say hi to you guys and do everything. I know I'm not following chat. Wifey's hungry. I'm going to go eat. You can say your bye now because I'm going to play a track. I'll see you, Bears. Peace.
All right, later, man.
All right, guys. It's Running with Bears. The real deal. Everyone else, get at me. GameStop. Can't stop, won't stop. GameStop. I'm going to see you around, millionaires. Peace.
Welcome
Welcome to Marantz Rantz, no advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertold, that knowledge is flotation. You wanna learn? Well, you came to right place. You're pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Henry the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC, a superstition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.